In 2023, a single company processed more money than Kenya's entire GDP. It wasn't a bank, it wasn't a hedge fund, it was a text message service built on technology older than the iPhone. And right now, governments across 3 continents are terrified of what happens next. This is the story of M-Pesa, the quiet financial takeover that most of the world never noticed. To understand how massive M-Pesa is today, you have to understand the friction of money in the early 2000s. Kenya's economy was overwhelmingly cash-based. If a worker in the capital city of Nairobi wanted to send money home to their family in a rural village, they couldn't just wire it. They had to physically transport it. Often this meant handing an envelope of cash to a bus driver, a Matatu driver, hoping it wouldn't be lost, stolen, or delayed. The friction of simply moving liquidity from point A to point B was a massive drag on the entire economy. It kept people trapped in localized poverty. Traditional banks couldn't solve this. Building a physical bank branch in a rural village with low-income earners simply didn't make financial sense for them. The real estate was too expensive, the security costs were too high, and the margins were too low. The system was fundamentally broken. But in the background, a telecommunications company called Safaricom noticed something fascinating. People were buying prepaid mobile airtime scratch cards, texting the PIN codes to their relatives in the villages, who would then resell that airtime to others for physical cash. People had organically turned mobile minutes into a makeshift currency. They were bypassing the banks entirely. Safaricom realized, if people are using airtime as money, why not just give them actual digital money? In March 2007, Safaricom, backed by Vodafone, officially launched M-Pesa. M for mobile and Pesa, the Swahili word for money. The genius of M-Pesa wasn't actually the technology. The technology was incredibly basic, run entirely on used codes and SMS texts. You didn't need an internet connection. You didn't need a smartphone. You just needed the cheapest feature phone available. The true genius of M-Pesa was the distribution network. Remember why banks failed? They tried to build expensive physical branches. Safaricom took a completely different approach. They looked at the hundreds of thousands of small shops, corner stores and kiosks that already existed across Kenya selling soap, bread and airtime. Safaricom turned those existing shopkeepers into agents. These agents became human ATMs. You walk up to a local shop, hand the agent physical cash, and they instantly transfer the equivalent digital value to your phone via SMS. When your relative in the village receives the text, they walk to their local shop, show the text, and withdraw the physical cash. It was brilliant. The infrastructure already existed. Within just 8 months, M-Pesa had over 1 million users. The network effects took over. The more agents there were, the more useful the system became. The more users as there were, the more profitable it was to become an agent. Traditional banks watched in shock as a telecom company built the largest financial network in the country almost overnight. When you remove the friction from money, an economy accelerates. Economists call this the velocity of money, the rate at which a single unit of currency changes hands. As M-Pesa scaled, people stopped withdrawing cash. They realized it was safer to just leave the money on their phones. M-Pesa evolved from a simple money transfer service into a massive digital vault. Soon, businesses integrated with the M-Pesa API. People began paying for their groceries, their water bills, and their electricity directly from their phones. Employers started paying salaries through M-Pesa. In 2012, they launched M-Shwari, allowing users to earn interest on savings and take out microloans directly from their phones, entirely bypassing traditional credit checks. For millions of people, their M-Pesa transaction history became their credit score. Studies showed that this single innovation helped lift roughly 2% of Kenyan households out of extreme poverty. Women, in particular, gained financial independence because they could safely store their own money away from the physical risks of cash. But as the system grew into an absolute monolith, it began to expose the darker side of frictionless finance. Here's what the success story leaves out. When borrowing becomes as easy as sending a text, something psychological breaks. The friction of walking into a bank, filling out forms, facing a loan officer, that friction was actually doing something useful. It made you think before you committed. M-Pesa removed that entirely. By the mid-2010s, over 49 mobile lending apps had plugged directly into the M-Pesa ecosystem. Some charged annualized interest rates of 300% to 800%, not a typo. And because the loans arrived silently on your phone with no human conversation, millions of people didn't fully register what they were signing up for. By 2020, the Kenya Credit Bureau reported that over 500,000 Kenyans had been blacklisted for defaulting on mobile loans, many for amounts under $2. Blacklisted. But the deeper problem isn't the debt, it's the dependency. Safaricom now controls something no private company should probably control: the circulatory system of an entire national economy. When it goes down, Kenya doesn't slow down, it stops. Hospitals struggle to process payments, farmers can't sell produce, families can't eat. That's not a financial service anymore. That's infrastructure. And it's owned by a corporation answerable to shareholders, not citizens. Central banks across Africa are watching this and asking a question they never thought they'd have to ask. Did we accidentally outsource our monetary sovereignty to a telecom company? The answer, uncomfortably, is yes. Today, as we sit in 2026, M-Pesa has evolved into a super app. It handles wealth management, global remittances, and cross-border payments. The system that started as a basic text message workaround for rural farmers is now processing billions of dollars and inspiring similar systems from India to Latin America. M-Pesa proved one vital lesson to the financial world. True innovation in emerging markets doesn't happen by copying Wall Street. It happens by solving the friction of the everyday person. But the landscape is shifting again. While mobile money conquered the last 2 decades, a new silent revolution is quietly brewing across Africa, one that promises to bypass the telecom companies entirely and make borderless money a reality for everyone. How are stablecoins quietly solving hyperinflation in emerging markets? That's exactly what we will uncover in the next episode of Frontier Finance. Make sure to subscribe and click the video on screen now to see the next piece of the puzzle.